Well, welcome back, everyone. It was another incredible day in markets today, and we did a special class first thing this morning. Welcome to all our new student family members. Lots of great feedback from that morning class, and of course, I want to give you my feedback and insight on the markets right now. We're looking at the S&P 500 through the lens of the S&P E-minis. You can see that from the tumultuous selling into the end of last week, we've had a counter-trend bounce that was really sparked by a treasury short squeeze that helped the equity market get off the ground. That continued on Monday. We then saw the edge taken off of it yesterday, but today we've come right back up, pushing up towards the highs and making slightly higher highs than yesterday's market move. We are still in that bigger picture, longer term uptrend channel going back to April the 21st. Now, we're in the lower half of the channel. We are starting to run a little drier on bullish fuel, but there's been a turnaround in today's trade, and it has been led by the Mag 7 gang, if you will. The NASDAQ in today's trade was up 1.4% versus yesterday's close, while the S&P 500 was up 0.7%. Now, there's a bit of a bearish omen when you take a look at the small cap index. It's actually down about 0.5% as I record this right now, with futures still ticking away for another 48 minutes or so before they close for this session. But we are past the cash hours. When you look at the imbalance between the Russell, the NASDAQ, and the S&P 500, it simply highlights that the market is concentrating to fewer and fewer names. And as we move up, we're going to need to see buying beget buying. Otherwise, the Mag 7 gang giveth, and they taketh as well. How do we identify the probabilities of a continuation up for the primary market and see if we can get back up into the 6400s from the upper 6300s that we're in right now? Well, we're going to go take a look at the triple S indicator on a daily candlestick chart basis. We noted, and I've noted in videos just like these, that we have not seen a negative momentum shift yet. We haven't come down and seen that triple S line cross and stay. Outside of a brief moment in Friday's trade, last Friday, we haven't seen it stay from quad 4 to quad 3, haven't seen it cross below the slow momentum line to give us that bearish signal. We are still about 100 points higher in terms of where that danger line is. It's sitting at around 62.75. Breaking below there opens the door for the second leg of that selling that started last Thursday and Friday from the all-time intraday highs made on July the 31st. So we haven't gotten down there yet. Are we going to get down there? Well, the daily chart using the triple S indicator today is in a spot where that triple S line is holding above the fast momentum line, and we're in the uppermost quadrant. So the door is open for a continuation up. As brief as it may be, it's still in force right now. The 4-hour chart, which looks out 3 to 5 days, is still operating off of a primary dominant sell signal from Thursday. That was July the 31st. But as you can see, we've got a bullish speed line crossover, and price action is holding above the top of the MSR channel, and the triple S line has come up above the fast momentum line. Albeit still in the first quadrant, this is a partially bullish signal and can last for days. When we take a look at the 1-hour chart, excuse me, we can see very clearly here that on the 1-hour chart, we had a bullish signal. And that happened this morning on the 10 a.m. Eastern time bar, where we saw the triple S line cross above the fast and slow momentum line. And in fact, at around 10:35 a.m. Eastern time, while I was teaching the class on this toolkit, the triple S toolkit, we noted that we had a buy signal after a period of conditioning where we had some oscillative signals and the blue line was still sloping down. We finally started to see the blue line flatten out, and we got our buy signal on a triple S standpoint. And from the bottom of that bar at around 63.30, the market eventually rose all the way up in towards that 63.80 area. Incredible move, 50 points. And the primary move, of course, took us up to the highs over here in the low 63.70s. 40 to 50 points up on an incredible signal that followed through, having the backing of the hourly signal. And of course, we use the 1-minute chart to illustrate how to utilize the toolkit to get in at a better time. And of course, at 10:35 a.m. Eastern time, we did get that bullish signal on the 1-minute chart in today's trade, and it was right there and up, up, and away we went, of course, managing the oscillations as they came to us. This has been an incredibly tradable market. There have been incredible moves across a variety of asset classes. For instance, the Triple S scanner today caught a move on gold, and you can see that right there, pre-market, starting at around 8:50 a.m. Eastern Time on gold futures, gold made a move effectively from $3,418 all the way up to $3,438, $20 a contract, an incredible move signaled by the Triple S indicator. I hope that this illustrates the power of the toolkit and, of course, having an objective view and sober view of the markets. A lot more insight to come, but this market does have the room to potentially come back up, try to test that 64.12 line. Watch out below 63.48, and of course the center of the weekly pivot range, the bottom being 63.03. The big danger line is still sitting down here at 62.75. A continued jaunt up towards 64.12 and then a push back down would not be off base in this market as we've come in towards the last couple of days this week. Thank you for watching. A big warm welcome to all of the new students joining our student family, new Triple S students, and I look very much forward to continuing the learning journey with you here day in and day out. I hope you enjoyed the video. Have a wonderful rest of your day.